You guys know I've been trading silver. I have trailed my stop loss further. Yesterday afternoon in our signals room, I updated members to the idea that I am now trailing this stop loss further in. Gosh, I really wish my pen would work. It's giving me issues this morning. I probably have to restart my computer, but it's all good. But I trailed my stop on silver here this morning. Below this swing low here intraday, we've got this kind of level of past resistance that I'm looking towards as potential support, right? So you've got a big key level here. In fact, we broke through that level. We retested it once, shot off it. Second time, kept going. Even today, intraday, we've come down to this level. I'm happy to hold in my silver position as long as momentum persists, and specifically that we don't break the low of this candle here. If we break the low of this candle, then I'll take profits on the trade that I'm in, and I'll look for another opportunity to potentially enter. That's the way I see silver right now. I like the trade quite a bit. I do think it has room to run. And gold and silver, I think the path of least resistance is, believe it or not, higher. People have been thinking I've got a lot of people who are, the gold bears have, they come in and out of the woods, right? They get really loud and then they get really quiet, and they get really loud and they get really quiet. There was a bunch of comments on this day. Oh, this is it. This is it. Gold's going down. Then new high, new fresh all-time high. Look, gold will eventually pull back. But again, I've been repeating myself on this subject. If you're looking at gold right now and you're like, please gold, please go down. Will it eventually happen? Of course it will. Everything pulls back eventually. But I've said this once, I've said it again, I've said it a million times. Calling the top on this gold move is harder than it looks. People have been literally saying gold's going to sell off for weeks now. And meanwhile, blowing accounts, loading up more money, blowing accounts, loading up more money. Trading is hard, okay? So just understand that if you have a theory that gold is going to be bearish from here, totally respectable. You might have a system, a strategy, a reason for doing so. But just know you're going against the flow of traffic here, and this thing could just continue. If you think gold can't go higher, trust me, it can. It's not necessarily, certainly going to go higher, but we could easily head up to 3,100 without a pullback, right? Gold is the age-old account blower, right? A lot of people lose a lot of money trading gold because they try and bet against when it trends. And that's like the hardest trade in the book, is betting against a trend in the NASDAQ or gold. Those two things, when they're trending up or down, really, really dangerous. So for me personally, path of least resistance, gold goes higher. If it doesn't, if it breaks momentum, then yeah, we could probably see a pullback into this 2780 area. But again, my opinion would be dips are innocent till proven guilty. If you get one, I'm more likely to be a buyer than a seller. So we'll see. Silver, same kind of concept. This one I think has a lot more room to catch up, right? Even this recent kind of pullback level this isn't the all-time high, but this is, let's call it the last 10-year high. Silver had a monumental run up in 2011 that it still has not gotten back to. But let's say 3480 is the high. If 3480 is kind of our high here, I do think that we have a good chance of retesting that area. And think about what that would mean in terms of percentage. That's an upward move of 6% on the commodity that I think it has room to run up to real quick. When silver has those moves, they can be very violent. Now, of course, it could fail out. The momentum could fizzle, and in which case I'll take profits on my trade. I'm sitting in a profitable position, and if it keeps going, I'll keep trailing stops, and if it breaks down, I'll take profits. It's a really good spot to be in with trading. For me personally, it's my favorite situation, obviously, where I'm at a point with my trade where it's not a question of whether or not I'm going to make money, because I am going to make money on this trade. It's a question of whether or not, how much money is the market going to give me here to work with. What I mean by that is that if this market does something like this, right? If we go up and break out and continue, continue and continue, then I'm just going to take that stop loss and keep trailing it and trailing it and trailing it. So I'm always, I don't have a fixed risk to reward on my trades because of that, right? I don't know how much money this trade could possibly make me. If this thing keeps ripping higher, then it could go for a lot longer, right? So I kind of love that about my trading style. I don't use a strict take profit order. I just simply trail stops. And what that means is sometimes you get really big moves where you can keep trailing and trailing and trailing. Other times you don't. A lot of times you don't. A lot of times you get these kinds of moves. What would be pretty typical for my trade would be this to happen next. That would be annoyingly how oftentimes it goes, right?
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Okay, flash manufacturing PMI came in pretty much as expected, and services came in a little bit light. Okay. Market reaction here, dollar index is lower. Stocks, they were already lower, so I would call their reaction not too much in either direction. Gold is slightly higher on that, Bitcoin slightly lower. Okay, we'll come back and take a look at that in just a second. This is really important stuff. I really want to make sure I hit this message to people who are on the cusp of joining the dark side right now with us. What I mean by that, as you know, dark side is my analogy for the fundamental analysis. You know why it's fitting to be on the dark side? You know why the fundamentals, the macro, that side is the dark side? Because those big, bad Wall Street bajillionaires that dominate the markets, we would call those the dark side, right? They also use fundamentals. That's like you listen to any interview. If you don't believe me, I'm not making this up. I'm not saying this because it fits my narrative. I'm saying this because my narrative came from understanding this. The big Wall Street guys, listen to them in interviews. They're not talking about head and shoulders patterns. They're talking about macro. They're talking about what the Fed's doing. They're talking about business financials. They win on the markets, do what the winners are doing. So they're talking fundamentals. So I was talking about PMIs and why I love PMIs. They're forward looking, because if you asked a bunch of CEOs, I said, like, let's put all the Mag 7 CEOs just as an example, Google, Amazon, Microsoft, you ask all those CEOs, are you hiring right now? Do you see bigger than usual sale orders coming in right now? Do you have headwinds in your business? Do you have higher costs coming in that are making your business harder? Do you see your business growing a lot, a little, or some this year? If you could ask those people those questions, they have the insights to tell you, not with certainty what the future is going to be like, but a good indication of how their business is likely to perform because they have all the KPIs, all the metrics in front of them. That is why I love the PMIs. It's forward looking. You're asking a bunch of key hiring managers and purchasing managers and people who make decisions at all these businesses. You're asking them their forward look of the economy. If they all feel good, that's a good indicator. If they do not feel so good, that's a forward indicator that we can use. So that's why we look at fundamentals, because fundamentals create trends that create price action trends later. That's why we look at fundamentals.
Manufacturing came out relatively okay at 51.6. Services missed at 49.7. We generally want to see those above 50. That's a pretty safe spot. So we did see the dollar decline off the back of that, but nothing too major. It's only the 15-minute time frame. So it's, another tick in the cautious dollar box, I guess you could call it. But yeah, it's not something I am really looking to be involved with at the moment. Fundamentals don't make you profitable, guys. Always sales pitch. Fundamental data doesn't change the direction of the markets. Gaming channel, what moves the markets? I'd love to hear your answer on that one. Jack, hello. Bashi, hello. Self-substination. I don't know if I said your name right. Marcus, hello. Sweet. Okay. Lee James is missing ball out. It's kind of sad. Sad to see. Sweet. Giovanni, hello. Okay, let's get started. So I have decided to execute on oil. Now, typically, this trade's actually kind of fallen apart within the time of placing it and now. So oil was very briefly on the edge finder as a bullish reading. It was only a 5, but now it's disappeared. So the reason I took oil longs, it's more of just a very loose, very low risk speculative trade, or hedging maybe on a little bit of a gamble. You can call it what you want. But we had previous resistance now acting as support. Again, it was reading bullish on the edge finder, broken out of a descending channel. So I'm just looking to see if we can get sort of back to around anywhere between $75 and $78. So again, we will see, but it's not a super strong trade idea. Euro yen, decided to take this one as well. Again, edge finder, very bearish reading. Actually, it's the most bearish with a -10. So currently short euro yen. As you know, I've switched to a very bullish opinion on the yen recently. I'm still short Swiss yen. We've got silver. I'm still in my silver longs. Dollar Swiss also still long, but I think I'm going to cut this one pretty soon. If we break below the support level, I'll get out, and that'll free up some margin for me. Market Pulse, hello. Ball out, you're long on oil. Oh, it's sorted then. If me and Ball out are long on oil, I think that's enough to move the markets to the upside. Alan, use astrology. It's about the same as using technicals, my friend. Oil still long, waiting for test of support. Then we'll enter again long. Okay. What's your opinion on euro dollar? Euro dollar. I'm still bearish on euro dollar, but not so much at the moment. So if we look at the heat map for the euro, or for the eurozone, GDP had a slight increase, which obviously for the negative factor of to short euro, it's not what we want to see. PMIs came in slightly higher. Services had a decrease. Retail sales had a decrease. CPI, PPI had a pop to the upside, which also isn't great if I'm wanting to short the euro. Unemployment rates had a slight tick to the upside, but that's not really the problem. The problem is lying within the US dollar. So we can see GDP tick to the downside, services tick to the downside, retail sales tick to the downside, CPI tick to the upside, which actually is fine for long dollar, PPI downside, NFP downside, unemployment had a tick down, which is also quite good. Unemployment claims tick to the upside, which isn't good for long dollar. And obviously we've got ADP as well. It did very well, but to be quite frank, I don't really know anyone that cares about ADP. So yeah, the overall landscape at the moment for euro dollar shorts for me just isn't there anymore. I'm still expecting parity to come in, but not for a long time. So back in December, I was talking about parity and I was looking for it to come pretty soon. I was talking about sort of Q1, Q2 of 2025. I've completely scrapped that idea. So if we are going to see parity, I would expect it to come, yeah, sort of Q3, Q4 now. Whether it will happen, no idea, but we'll have to see what the outcome is with Russia, Ukraine, and tariffs, and even risk on, risk off flows. So a lot to digest for now. This is why I'm sat on the sidelines. We've got other things to focus on, mainly the yen. Afternoon, James. What's your opinion on Bitcoin? We can have a look at Bitcoin in a second, Anthony. Nasdaq. Okay. James, why cutting Swiss yen? Looks like a lot of potential to move lower. I'm not cutting Swiss yen. I'm looking to scale into Swiss yen. Euro pound. Okay, cool. Yeah, we'll just go through some different things then. Where do you think yen will end up in the last quarter of the year? Okay, cool. So we've got some things to look through. So let's start with Bitcoin. I don't have as much time as normal. I'm stepping in for Kenzo today, so I've got about half an hour. So we'll do a rapid fire through all of these charts. So as I always say, I'm not a crypto trader. So take my thoughts and views here very, very loosely. I don't know the driving factors of any crypto market. Just going off technicals, though, it looks like we're looking for a possible breakout here. So what you could either do is look for the retest now we've broken above this range, which actually might be happening now, or wait for a slightly larger pullback, maybe a 50% back into the middle of the zone or the range. And then possibly we could start looking to go long back into the previous highs around 107.9. But yeah, to be quite honest with you, that is really all I've got for Bitcoin. So NASDAQ being asked for as well. I'm very flat in terms of the equities US indices markets. So the reason is we're just not seeing any real movement. We've got a very small upwards trend here, but it's not enough for me to go in. And the reason is because we keep rejecting this previous high or this previous all-time high. And I'm not going to be the one to start buying it right here. I think it's way too premature. And I think it'll be a little bit of more of a desperation or FOMO move rather than a calculated entry at this time. So I was going to go in. I would really need to see some sort of pullback into this previous level. And then, yeah, sort of going long from there. In terms of take profits, it's actually, we were discussing this yesterday. And I think it was on gold. I was talking to Nick. And the problem is, when you're in a situation like on the NASDAQ or like on gold, when you're looking to go long, you have no point of reference. There is no way for you to look for a take profit because obviously there is nothing up here. This is all-time highs. So you've got to really do one of two things. You can either just go off gut instinct. You can say, okay, you know, I'm happy with the profit. I see some exhaustion. I'll get out. Or you can obviously use the sort of macros and the fundamental data releases. So, okay, you know, maybe the Fed's not going to cut rates as much this year. Maybe I want to get out now. But yeah, to be honest, targets, I've got absolutely none for NASDAQ. It would be a case in my situation of just trailing stops, basically copying Nick's idea or Nick's strategy of just trailing stops under lows and letting it run. Because yeah, there's no way I would be able to find a real target there. Okay, let me just catch up on the chats. Give me a second here. Oh, Euro Pound, that was another one, wasn't it? I'm sitting bearish on Euro Pound. So obviously we've already covered the Euro backdrop or the heat map. In terms of the pound, it looks a little bit more optimistic. We did have higher, we did have higher CPI, which does reinforce at least a rate hold. I mean, the Bank of England's currently in a cutting cycle, if you will, if that's the right word. And the problem I see there is that's more of a long-term problem because the Bank of England needs to cut rates. Essentially, they're really not in a good place economically. But in terms of just trading, it's fine. It does give some reinforcements to a sort of short-term strength within the pound. Overall, as I just showed you, the pound economics are heavily or slightly outweighing the euro. So I think shorts are still in play. But the problem is with euro pound is it's very difficult to get an entry based on technicals. And the reason is because it doesn't move like a typical G10 currency pair. Because the euro and the pound are relatively highly correlated, you often get these really erratic moves to the upside followed by really strong moves down. And it's not really an asset or a pair that works well off technical levels. It's very, very sort of sporadic, if you will. So to be honest, my technical idea here might just be waiting for the next aggressive move to the upsides, wait for something to pump this market up, then get short. Because as I just showed you, this market is very, very mean reverted. So you will have very aggressive moves to the upside followed by the continuation to the downside. And trust me, I've been bitten by that many, many times in euro pound. So I'm a little bit scarred on that one.
Pretty interesting week. We did poke the all-time highs once again. We faded hard yesterday, and we are getting some follow-through. You know, I don't know exactly why. What's the reason? We did see some poor news this morning out of the U.S. PMI numbers were okay. Services PMI below 50, not a good sign, though. I will say that. Okay, services PMI below 50 is not a good sign. Manufacturing PMIs come out in a big way. That's what part of the inflationary push has been, is like, manufacturing PMI above 50 for the first time in a long time. But services PMI, which is kind of our bread and butter, is we're a tech country and a services country, and seeing this below 50 is not a great sign, especially from a forecast at 53. So that seems like a big old whiff. And then on existing sales, home sales were down, which isn't a surprise with this unaffordable housing market. And then University of Michigan sentiment came in a little bit softer as well. But sentiment, I would attribute that to similar to like the AAII sentiment survey. What am I doing? There we go. Let's go to the tool. The AAII sentiment. So let's go to our risk on, risk off gauge. Here's my sentiment positioning. Here's your retail sentiment, AAII right here. So this should have printed February 17th. So this prints every Wednesday, I believe. Is that right? Or is it Monday? I don't freaking know. It prints once a week. But it was interesting to see this. Oops, let me change the color here. To see this kind of bearish sentiment, and yet the market went up to all-time highs, and then we're kind of back into, I wouldn't say neutral. We actually have more of the market bearish, but it's not extreme where I'd want to be a contrarian. So my point is, looking at University of Michigan here, if you come into the graph on consumer sentiment, okay, inflation expectations 4.3, that was forecasted, that was previous as well. Come into sentiment, take a look at the graph. I mean, looking back into pre-COVID, I mean, we were a lot more enthusiastic about the market according to this print. Obviously, we had our, July, August, September lows. This is how you play the contrarian side, right? It is so bearish out there and so I'll just say so pessimistic that was a buy signal. Okay, it was also so euphoric coming into 2019 and 2020. COVID was the bow, COVID was the why, COVID was the excuse, but the market was already primed for a sell-off. Technically speaking, I was bearish going into COVID, not knowing that COVID was going to be the reason that the market basically imploded for 45 to 60 days, right? But point is, that's how you use sentiment. When you have extreme positioning on one side or the other, you can be a contrarian. If we're just in the middle and just kind of hanging out here, doesn't really mean anything. So it's a one-off, but I do think that given the fact that we have poked highs and struggled to close above the highs, this is another good example of bull traps and bear traps, right? I'm not surprised that the technicals are aligning here to see that we have gotten up to the highs, but we're not getting any momentum above it. And I'm sure there's going to be some traders that look at this and see, like, do we come back into the middle? I'm still trading a lot of setups where my wiggle room is down here. I'm trying to stay out of the way. If we have another sell-off day today, that'd be great, because I'd like to come into Monday and just sell more premium. I'm always happy to see if the IVX is going to improve or the IV rank is going to get higher, especially in the indexes. Selling more premium is a good thing. Okay, so I'm going to take a quick peek at this SPY trade that I have. This was a hedge on the day. So my 605 by 600 right now is trading for 61 cents. Come on, baby. Give me a couple bucks to the downside, would you? All right. And then I'm just off all-time highs. I poked highs today around 190K in the portfolio, which is, getting off to a pretty good start. Alibaba I saw continue to go higher. Let's keep an eye on it. NVIDIA earnings, yeah, we'll see. NVIDIA earnings, it doesn't necessarily mean it's going to be a good thing at all, right? NVIDIA earnings, I think NVIDIA is priced right where nobody wants it to be. Because if we're right here, is it good enough to, wake up the Mag 7 and start to lift the markets back up? Or is it going to be, NVIDIA doesn't have the same exponential growth expectations, and it's like, it's not good enough. I don't know. Okay, I mean, I can price out. Let me take a look and see what NVIDIA's earnings are expected to be. So NVIDIA, so their average move is around 10%. You can see we've had some single-digit ones, but we've had some teens and some high volatility as well. I'll say, 10% seems about average. Okay, so 10% move. How often do we get to a 10% move? Let's go back for the last, let's go out 8 to 13 days. There's kind of my cutoff. So we don't get there. We get there day 8. Okay, we get there day 3. We get there immediately. We don't get there. We don't get there. We do. We do. We don't. We get there day 8. We get there day 3. We get there day 3. We get there immediately. We get there day 5. We get there day 13. That's like my least favorite. I'm going to cross that one off. This one we get there day 8. Okay. So of that little back tested earnings, we have 1, 2, 3, 4, 5 no's. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 times we get there. At least, and what I'm saying is when I say get there, I mean to the expected move. So 11 times we get there, 5 times we don't. So the expected move is going to be around 10%. We're trading at $139. So that means we're going to have about a 13.9, right? Roughly 10% move on a 139.30 stock. You're looking at about a $13.90 to $14 move. Now, if I go in to see what the market makers are looking for, the plus minus on NVIDIA for, let's say, I wouldn't really want to go out just to the 28th. I'd want to go out maybe another week. So the 28th, maybe take this in the first part of March. I mean, the market makers are looking at about a 13.24 move. Okay, so that's right. That's pretty much on par with like, okay, we're looking at a little bit higher bump in earnings. If I wanted to say, you know what I could see NVIDIA doing, if I went out to the end of March, like March 28th or even into April, I know that's way out there, but what we could consider is, okay, now the market maker's looking at about a 20-point move. If I were to price this out, I'm just looking at like a straight up volatility play, because on this chart here, go to NVIDIA. Just want to check on Netflix real quick. Netflix is good. This is a broken wing that's looking a lot better going into next week. I need this thing to stay above 10 or stay below 1040. Meta, got a trade on that one as well. Costco, this one's dropping hard. I've got a nice little broken wing butterfly there, so those positions are looking pretty good. I want to go to NVIDIA. So NVIDIA was coiled into all this. And so we just had like retests and a lot of volatility. We had a big, like, 25, 30% pullback there. What was that correction? From that retest to that low was a 26% correction. And then we came up, 25, 26% to the upside. But what I see right now is I don't really see, I don't know. I honestly, like, I don't necessarily see it making new highs or new lows. I don't know. I'd almost consider taking NVIDIA and saying, you know what, I think I'm going to sell premium. That might be one easy way to look at it. Or just, and don't necessarily do it pre-earnings, but maybe post-earnings. Because if it's post-earnings and this thing doesn't go anywhere, then a quick, like, iron condor could actually be a pretty easy profit. But I obviously don't want to be selling premium and have this thing go so excited to go up that it's going to drag the SPY, the Qs, the Mag 7, it all goes with it. The one instrument, if you're looking at mags, this could certainly be moving more next week. NVIDIA will definitely influence this instrument. So this is a Mag 7 ETF. It hasn't gone anywhere. I think the reason the markets have been so quiet this year and so choppy this year is because Mag 7 isn't going anywhere. Everyone's looking for market breadth. Everyone's looking for some type of rotation into financials and rotation into industrials. That's great. But the reality is none of those sectors really lead in a strong bull market. None of them. Like having utilities, basic materials, industrials, energy, financials, if those are your leading sectors, that's not a really healthy bull market. In the history that we've seen, like the biggest runs of S&P and NASDAQ being up 15, 20, 25%, it is not led by those sectors. Now, I do think you have to have a necessary rotation because you can't have this high concentrated market like we've seen. You can't, okay? But going into those other sectors to me means like those sectors don't perform as bad, but the overall market, if we just have this big rotation, I just think it's going to be like a choppy year, and it's not like it has to be a bad year. It's just going to be it's going to be a weird year that everyone's looking directional and you're not getting any direction, and so that's literally what I'm trading. For me to be sitting here at 180 grand in profit, I've traded little to no direction outside of being long gold, long silver. Bitcoin isn't going anywhere right now. And then Alibaba's been a nice winner of like $40 some a share. Like that was a lucky play because the stock's up 70%. But other than that, we haven't really had a lot of direction. I've mostly traded non-directional strategies on indexes, and it's done really, really well. So I will continue to do that until I think there's more happening, until I think I've got a better pulse of the market, which right now I don't. But coming off these highs, going into the next, so we obviously have end of the month next month. So we have monthly expirations today, end of the month next week. It's a short month in February. Plus we had a short holiday week with President's Day on Monday. But my question is, is this a high? Do we come back into the middle here, find some structure, or do we break back down? We can obviously see there's strong support through this election, right? This is the election structure. So we have lows. I mean, I could see this level get tested, but are we going to come back and find this 200 moving average? Maybe. I hope we do, because this is where I've said this for a couple months now. This is where I'm going to be the most bullish in 2025. If we come down to a 144 200 moving average or anything below that, I will be scaling in and positioning for a 60 to 90 to even out to the end of the year type move. I do think the market finishes positive this year. I do. But if we have a 10% correction and then we get back up to 15% off that low, let's say we dip 10% and then we rally 15. Okay, let's see what that looks like. So if we have a 10% drop from here, that puts us down to 5,500. This, again, totally hypothetical. But if we go down to 5,500, okay, just let me box that in. So that's a 10% drop. Now, if we rally from there to give us a positive year, let's say the market rallies 15%. Okay, so from 5,500 and it rallies up 15%. Okay, so that puts the market at highs for the year. Everybody can celebrate, everyone can breathe easy. The market didn't puke on itself and implode, but I could see us having that type of volatility. So if there's any opportunity for a dip or a pullback, this is where I'm willing to get the most aggressive. Okay, with options, not crazy greedy, but just deploying some capital, spacing it out over, probably 1 to 6 months. And if we get the move back towards the highs again, great. Because what does that look like? Well, probably having some, maybe having some inflation data improving, and therefore the Fed maybe cuts a little bit more. Maybe that reassures the market. There's a backstop here. Trump's going to be more vocal. The dollar's going to get weaker. Yields go down. All these things are probably not a bad thing. Okay. The weird part is how do we keep climbing this wall of worry? That's what I don't understand. And I don't think that's going to continue to be a sustainable strategy. So because we've had a 20% year and another 20% year, I can see the market just taking a little bit of a breather, right? That's all. So, all right, let's keep going. Let's go to equal weight. If equal weight pulls back, I am probably going to be adding to it. I'm in at 177. I've got a pending order at the 170s. If we have any follow through here, like high, low, lower, high, lower, low, I'll probably scoop up in the 160s again, but I'm going to keep a little allocation on RSP. Futures, I've got some hedges in. So you can see I've got some positions here that are paying out pretty well. There's bear traps or bull traps and bear traps and all that good stuff. I'm hedging on MES for some type of volatility squeeze. So either we go up and we break this top, okay, or we come back down here and we revisit moving averages. This is a volatility play that goes both ways. This is a hedge that is a low risk, high reward. That's what I'm trading on futures to hedge the portfolio.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.